Good morning, ladies and gentlemen. Welcome to our third and final webinar in the Sname and Diago series. Today's webinar is the real cost of dying and the legacy protection plan. We'll be starting promptly at 5 minutes past 10, just to allow a couple of minutes for the last couple of people to join the webinar. In the meantime, please make sure that you have a pen and paper to take down any notes from today's session. Please also feel free to ask us questions using the questions app within the webinar. Those questions will be fielded to our panelists towards the end of today's session. And yeah, we hope you have a great time with us this morning. We'll be starting promptly at 5 minutes past 10. Good morning, ladies and gentlemen. Thank you for joining us this morning in the third and final series of Sneman Diago's webinar sessions. Today's title of our series is The Real Cost of Dying and the Legacy Protection Plan. It gives me great privilege to introduce to you Jamal Sahib, business coach, entrepreneur, author, who will start with our first session and leg of this presentation. Jamal, over to you.
Good morning and welcome everybody on a lovely chilly morning in Gauteng, South Africa this morning. Clayton, thank you so much for hosting us this morning. We really appreciate the work that you do and hosting us so effectively and efficiently and giving us a platform where we can have some fun and learn new things together. So to everybody on the line this morning, thank you for dialing in. I'm really looking forward to spending the next 45 minutes to an hour with all of you and some time with Roman and Mario as we learn new things and we continue to grow during a very strange time in history. So as an introduction, some of you have worked with me before, some of you know me from, some people know me as the hardware store owner in Midstream, but however we've met or however you know me, perhaps I'll do a bit of a formal introduction again for those people that haven't worked with me before or have not dialed into one of my webinars previously. I am a metallurgical engineer. I spent just under 10 years in corporate working for some of the largest multinationals on the planet at the time, being BHP Billiton and Anglo American Platinum in the earlier 2000s. And post an MBA, realized that I always wanted to be an entrepreneur and started businesses of my own. I have a chain of 3 hardware stores now. We run a guest house. And I obviously run my business coaching consulting business or practice, which is my primary business and my real passion. So learning the tips and tools and tricks in corporate, combine those with an MBA and having combined those with entrepreneurial experience, I decided to become a business coach so that I could coach other business owners to grow their businesses. Now, important for me is the why. And my why is I'm really passionate about South Africa, and I really believe that it's up to us to create jobs in this country, because creating jobs is the only way that we will make South Africa a better place. So we can try and do all of the other things and get involved in all of the other noise, but the reality is, for as long as we have a high unemployment rate, we will have high crime and we will have huge issues within our socio-economic world, our social environment in this country. So I choose to live in South Africa. I would prefer to be a first-class citizen in this country, my own country, than being a second-class citizen somewhere else. And therefore, I decided that the grass is green here, and together we can create jobs and make this country a better place for our kids and for the future. So that being said, I'm really looking forward to working with all of you today. I've got some interesting ideas that I would like to share with people. I believe in abundance, and I believe in abundance because the more people out there that run businesses successfully and make more money, the more employment they create, the more money available in our economy, the more our businesses will succeed. So abundance thinking says the more we do for other people, the better they do, the more they succeed, the higher the probability that that success will come back and be shared with you. So that is why I coach and help business owners to grow their businesses, because together we can achieve more. So in every one of our webinars, I start off with a brief COVID update. Yes, we are not medical experts. However, I always tell the story of when I was with BHP Billiton, safety in mining is a massive priority. And there was a year in BHP Billiton where globally, the organization did not experience a single fatality in any mine anywhere in the world. And that was mining operations across the globe with more than 100,000 employees and contractors working on operations globally at any given day. And we got through without a single fatality globally in a full year. And how we got to that is BHP Billiton became passionate and almost borderline obsessed with safety. So we would start every single meeting with a 3 to 5 minute discussion around safety, so that every person that worked at a BHP Billiton site anywhere in the world remembered safety up front. And that is why I start every single one of my webinars with a brief COVID update, because I believe that it's critically important that as humans on the planet and as South Africans, we need to understand what's happening with COVID briefly out there. Yes, there are all the different theories about, it was made in a lab and all of those good things. That's fine. You can believe in whatever theory you like, but the facts that we have on the table right now is that there are more than 3.2 million positive cases of COVID found globally to date. So this does not mean that there are 3.2 million people with COVID-19 or the coronavirus. It means that of the people tested, 3.2 million people have tested positive, which actually means there are way, way more cases of coronavirus out there globally right now. Globally, we also find that more than 228,000 people have died of the coronavirus. However, the good news is, because we are optimists and we also look at the good news, more than 1 million people have recovered. So it's not a death sentence. However, it is a dangerous disease. Now, if you look at America, they've been quite complacent about the manner in which they've handled this disease. And they've had more than 1 million positive cases of coronavirus, and they've had more than 62,000 deaths as of yesterday. They've had 147,000 recoveries, but 62,000 people in the US have been declared as having passed away through the coronavirus. Now, that's a massive number. If we look at Italy, so Italy has a similar population size to the South African population size. The Italian population is in the region of 60 million people. South Africa's population is also in the region of between 55 and 60 million people. Italy has had more than 203,000 positive cases of coronavirus, and they've had more than 27,000 people that have passed away from the virus. Now, South Africa has obviously received the virus a bit later, and we are probably not as technologically as advanced as the Italians right now in terms of testing, but I think the government's doing a really good job of trying to get testing done as quickly as possible and as far reached as possible. We've had 5,350 positive coronavirus cases, and more than 103 people have passed away up to yesterday. So what I'm trying to say is that coronavirus is a reality. So let us not become complacent about it and get sick. Let us rather err on the side of caution, stay positive. Many of us are worried about the impact that it's having on our businesses and on the economy in general and people's lives. The reality is, if you have the coronavirus, I think it's going to be even more stressful. So for now, let's be cautious where we can, and let's stay positive. And through conversations like these, let's find ways to keep the economy going and to continuously run our businesses and find ways to generate revenue and income. So I'll start off with a recap on the last two webinars that I've done for some of the audience that's here today. And then I'll move into some interesting stuff around understanding some levers on your income statement and understanding how to do business out the box and how can we pull some of those levers and what is some of the marketing that we can do to change the way we do business, because the world has changed. So I'll try and use some examples that are relevant to the specific industry of real estate and law. And I'll also use other examples that we've implemented in different industries to showcase some things that can be done. Then I will hand over to my two colleagues, Roman and Mario, and they'll take us through some important things around the real cost of dying and having a legacy protection plan. Then we will open up the floor for the last couple of minutes and we will take questions. So if you have questions, ladies and gents, please type them into the questions box. Clayton will pick them up, he'll screen them, and he will then ask the questions through to the three of us, and we'll try and field them as best as possible at the latter end of this webinar presentation. So as a recap, we started these discussions where people heard about the coronavirus and they received lockdown instructions, and people immediately dived into what we called the fear zone. Now, we've spoken about this, and in the fear zone, people started to grab toilet paper. I don't know why toilet paper still, but medication and food that they didn't need because they were worried. They were often angry. They were forwarding messages on WhatsApp and Instagram and Facebook and through email and through any channel that they could find. Some of it was fake. Some of it was just negative stuff, dragging everybody down. But when we are in the fear zone, we do some strange stuff when we're under pressure as humans. So in the first webinar, we quite quickly focused on pulling people out of the learning zone. We focused on pulling people out of the fear zone into the learning zone, which is the next zone. So after the first webinar, many of us moved into the learning zone, and in the learning zone, we stopped consuming negative stuff as much. We stopped forwarding negative things that were sometimes fake to other people. We looked ourselves in the mirror and we asked ourselves, were we those bucket dippers? Were we those people below the line that was de-energizing everybody around us? And we've started to change our behavior. We stopped taking photographs through our windows of people that were standing at the edge of their gardens. And we started to be a bit humane. We started to be empathetic. We started to think about people that had perhaps psychological conditions and psychiatric conditions where depression was starting to kick in. And we started to think about those people, and we started to manage and deal with them differently as well. And that's because we were in the learning zone. We also spent a little bit more time dialing into webinars to learn a few new things. Perhaps we've picked up and started reading a few books, like my friend Clayton did. You know, we moved into a more calm space in that zone. The next zone that we moved into, or we are moving into right now, it's one of the two. Some of us have already moved there, and some of us are still moving into this zone. And that zone is called the growth zone. And in that zone, we appreciate much more. We appreciate the people around us. We start to ask ourselves questions like, okay, so if I was to be stripped of everything and could choose to only keep 3 things, what would those 3 things be? And through that process, we start to understand what's really important in our lives and what are those things that determine whether we've been successful as humans on this planet or not. So in that growth zone, we start to understand our talents and how can we use our talents to add value to the world and to other people and to our businesses and to the people that we work for and to our families and to our society. So in that growth zone, we behave in a very different way. Now, I'm hoping that we will remain in this growth zone for quite a while, because the lockdown is moving from level 5 to level 4, which is not what many people thought, that lockdown would end and life would go back to normal. Life can't go back to normal right now, because the reality is there are more people right now with the coronavirus than there were before we went into lockdown on the 26th of March. So it wouldn't make sense for us to just go back to normal life, because immediately the coronavirus would start to spread at a rapid rate. And our hospital facilities right now in South Africa cannot deal with that. So the first prize would be to remain in this growth zone. Let's remain cautious, let's remain empathetic, and let's find ways to use our strengths to add value to our businesses and to our families and to the people around us. The next thing we spoke about was the fact that there are 2 types of people in the world, and this picture of powerful people living above the line is directly out of my book, Start with the End in Mind, where I speak of the 2 types of people that we find in the world. There are those people that live their lives above the line, and those people take ownership, accountability, and responsibility for everything around them. They generally energize people and teams, and you will find that they are successful people. Now, right now, many people are still below the line, unfortunately, where they're blaming government for the current situation and where they are, and they're blaming the Chinese for the coronavirus. And the reality is, a human being has so much of capacity. Let's call this capacity 100%. If we spend 50% of that capacity on blaming and looking for people to be angry with and The long and the short of it is that we would then only have 50% of our capacity left to do the important things that matter, the things that we had control over. So remain above the line, take ownership for your own world, take accountability to change what needs to be changed so that right now you can survive in your business, and set it up so that in the short to medium term you can start to thrive and you can be successful again. So let's use that 100% of our capacity, no matter how difficult it gets. Let's use that 100% of our capacity to stay above the line. Take ownership, look for ways to be better. As Jim Rohn always says, or said, he said, don't wish it were easier. Wish you were better. Because if it was easier, it would be easy for everybody. So the whole baseline shifts. But if it's tough, and if you wished you were better, then you would move echelons above the baseline. Now, what did he mean by wish you were better? He meant take ownership, accountability, learn and grow, find ways so that you can be better. And therefore, you will stand out and you would be able to add value beyond yourself. We then spoke about being learn-it-alls, and we found that often people become know-it-alls. And once you become a know-it-all, you stop learning and growing. And one day the world changes, and it's not the world that you knew a few months ago. And if you don't stay learning, you will drown. Suddenly, what you knew is not relevant. So if you stay learning and you remain a learn-it-all, as the world changes, you continuously stay on that curve, and you can continuously run your business and adapt your world around you, even whilst the world is changing. We then spoke of and conversations, where we can work and have family lives and have fun. Similarly, right now, because the COVID risk has not disappeared completely, we need to remain safe, we need to remain healthy, and we need to start running our businesses. So yes, in level 4, it means that some industries cannot go back to work yet. However, it does not mean that you may not work. So maybe this is a good time to mention, well, many of you follow me on Facebook and Insta, and I follow quite a few of you guys and ladies on Facebook and Insta, and I saw yesterday that JP he signed a deal right in the middle of lockdown, like recently, in the last couple of days. JP signed a deal, and that's a perfect example of somebody that's staying safe. He's working hard at staying healthy. I hope, JP, we're going to have this chat, and he's finding ways to run his business. Now, I know JP is on this call as well, and JP hasn't missed a single webinar so far that I've run, and that just shows his willingness to continuously learn and grow. And that's how I know JP. And JP is actually an inspiration for me. So I literally, when I see JP, I go out of my way to have a chat with him, because he's an inspiration to me, because he never gives up, right? So that's just an example that I can use for somebody that many of you on this call actually know, that's staying safe and healthy and continues to run his business. And he's looking for different ways to enable this. The next thing we spoke about is light bulb moments. Now, it's important that we recap, because as humans, the first time we hear something, we take in a certain percentage of it. And the second time, when we recap it, we take in a much higher percentage of that information, and we store it in our long-term memory for us to continuously use. And that's why quite often schooling systems are designed in such a way that content is taught, and then there's a revision process, and then there's an assessment taken. So because we don't do that in adult learning, I always do a recap on the key themes that we cover, and it makes up a significant component of the next session before we get going again. So we spoke about how adults learn and them having light bulb moments. Now, as an adult, when you have conversation with somebody, or when you're sitting in a webinar and you're learning, there are some things that you will know, but there are other things that when it's described differently, it would be like a light bulb switched on. And when that happens and you go, why didn't I think of that way? Oh, that's actually quite cool. I didn't see it from that perspective. Please write it down, because when you write down your light bulb moments, you unpack them and then you start to implement them. And that's how we shift the body of knowledge for an adult. It's through light bulb moments. And then we spend quite a bit of time speaking about negotiation and the importance of preparation for negotiation and the different types of negotiation, and how important negotiation is in so many parts of our lives, not just in our business, but in our personal lives as well. Cool. So at the back of the recap, let's move forward. Now, business coaching has two components. Business coaching has a component which is life, and it has a component which is business. So I find myself spending almost 50% of my time in a coaching session talking life, and about 50% of my time with the client when I'm coaching, we then discuss business. Now, the reality is, if your life is in shambles, the probability that you are going to run your business effectively and efficiently is extremely low. So as a business coach, when I work with clients, we work on life and business, because the moment we can get people into the right life space and they understand their end in mind, we get them to be more positive. Now, this is actually an equation that's drawn out in the form of a picture. It also comes out of my book. It's an equation that I came up with, and a picture that my illustrator drew out of my description of how this works in the world to him. So as we get people into the right world mind space, people are more effective, they are more positive. When people are more positive, they are more energized and they are more productive. So if you increase somebody's positivity, you will find that that person will be more productive. Productivity has a direct impact on money. So if you are more productive, you will either waste less or spend less, or you will sell more and make more money. So either way, you impact the bottom line positively if you are more productive. If you are more productive and you impact the bottom line positively, it means you make more money. If you make more money, it means you have the ability to free up time. And the combination of time and money leads to happiness, because money is an enabler. Money will never make you completely happy. Money is an enabler that will allow you to be able to do the things that really make you happy. Like, for example, for some people, it's spend time with their families. With other people, it might be spending time in the bush, or it might be spending time traveling. But the reality is, you need to create money to be able to create time, and the combination of the two will then allow you to live the life that you dream of living. So in essence, we need to focus on both life and on business. So the discussions that we've been having has been predominantly around life, around being positive, around being a bucket filler, around staying above the line, around the importance of learning. It's around, significant amount of it has been around life. And there have been components around business, like the importance of negotiation. And today we're going to go through basics of income statements. So for those of you on the call that have done postgraduate studies in accounting, I've simplified an income statement to its single lines, and we're going to use that as a basis as we talk a bit of business and how people can use some tools in the business coaching space to make more money, right? Cool. So the next thing, and we're still talking life. So the next thing we talk about life before we move on to the business component is an equation that one day when I do a PhD, I'd love to do a PhD in this space. But I have found in the last 15 years of working both in global corporate and as an entrepreneur and a business coach. In fact, it probably goes way further than that. Back to the time when I was studying even undergrad, I realized, but I wrote this equation about 3 years ago when a light bulb moment happened for me. So L means leadership, and I call this the formula for leadership success. So if you would like to be a good leader in your society, if you would like to be a good leader in your business, if you would like to be a good leader in your home, there's an equation that you need to follow. And if you follow this equation, then it will increase your ability of being a good leader, right? So L is leadership. And the equation goes as follows, and I will simplify it. It's a function, leadership is a function of your IQ multiplied by your EQ multiplied by your CQ multiplied by your ability to deal with complexity. So most of us know what IQ is because, you know, the world speaks quite often about different people's IQs and Newton's IQ and Einstein's IQ. IQ is the intellectual quotient of intelligence. So how intellectually clever are you? Now, a significant component of that is genetic. And a component of that is also how you use that, because the more difficult math and science that you do, and you know, the harder you think, it energizes the synapses in your brain and it allows them to then expand. So there's a science behind it, but let's simplify to say that IQ is a component of whether you can be a good leader or not. Now, I don't want to be political, but if we look at presidents in South Africa and we don't go too far back and we try and fit this equation of IQ, EQ, CQ and ability to deal with complexity into different South African presidents over the last even 40 years if you want. Let's look to see which of those leaders were good leaders and which of them had high IQs, high EQs, high CQs and could deal with complexity. So we've only spoken about IQ so far. In fact, we can look at a leader maybe in a country that has a flag with stars and lines, and we can try and measure his IQ and test whether we think he's a good leader or not. So that's IQ, which is the first component. The second component of being a good leader is EQ. EQ is your emotional quotient of intelligence. So this is how emotionally clever are you? It's something that can actually be tested, right? So let me use an example of somebody with extremely low EQ. So you're driving and you cut somebody off like by mistake, really. You change lanes and you didn't see the person in your blind spot. And the person that you cut off absolutely loses their mind. They pull up next to you and they start showing you rude signs and they swear at you and they ask you to pull over because they want to beat you up. That is a perfect example of somebody with low EQ. Somebody who cannot think beyond the situation that just happened and the impact of their behavior in causing that situation to explode. And that person wants you to jump off and they want to smash your window with a chain and they completely lose it, ballistic. That's an example of somebody with extremely low EQ. Now, the chance of that person being a good leader is really, really low. Conversely, you have people that have a high EQ. People that when something goes wrong, the first thing they do is they look at the situation and they assess and analyze what happened before they react to it. So they'll look at it, they'll think about it, they'll get information, they'll digest it, and then they'll respond to it. That is somebody with a high EQ. So for me, an example of somebody with a high EQ is somebody that goes to jail for 27 years, and when they come out of jail, they're released from jail, they're not so angry that they like bomb a whole country. That is somebody with high EQ, somebody that's managed to control that whole scenario and situation of being in prison for 27 years of the prime of your life, right? And if you look, somebody with a high EQ like that was a good leader. Then there's the next component, which we call CQ. Now, CQ, not many people know of. But sorry, let's take a step back. So EQ is not genetic. EQ, emotional intelligence, is usually formed from the environment in which you find yourself. So if you grow up and if you find yourself living in an environment where people generally have low EQ, they're angry, they want to fight. Let's use an example. If you go to the Cape Flats in the Western Cape, if you grew up in the Cape Flats in the Western Cape, the chances, and I'm not saying everybody there that grows up there has a low EQ, I'm saying the probability of having a low EQ growing up in that world is higher because people generally fight more easily in a world like that. Versus if you grew up in a suburb in the middle of somewhere in Switzerland, a quiet, calm suburb in the middle of Switzerland where violence and people getting angry wasn't so predominant, the probability of you then having a higher EQ is higher, right? So the good news is with EQ, you can change your EQ by learning about it. You can change your EQ by being conscious about your behavior and by spending time with the right people, the people that are calm, people that think about how they will react to a situation or scenario, and you can grow your EQ as a person. So if you find that you're generally, they call it short fused, and you snap at your husband or you snap at your wife and you get angry quite quickly with them, you can consciously make a decision to change that. So EQ is not cast in stone. It's something you can learn and you can grow. The third component was then CQ. CQ is your cultural quotient of intelligence. How culturally intelligent are you? As a person, do you understand that different people behave differently because of different reasons? Sometimes people behave differently because of the socio-economic world that they grow up in. So somebody might grow up in a less privileged society and they live in a world where survival is the only thing that they think of and that they are taught. We need to be, as people with high CQ, understand that the behavior of that person would be different from somebody that grew up in an affluent home, in a different socioeconomic environment, in a rich home, that went to private school, that was taught to be prim and proper. The behaviors that you will get out of those two different people are different. Understanding that that will be different means that you have a high CQ. You have a high cultural quotient of intelligence. You understand that different people are different because they come from different cultures, different backgrounds, different traditions, different socioeconomic worlds, different economic environments. That is CQ. So if you look at South Africa, and South Africa is a complex country. There's a highway that runs that separates Sandton from Alex. And the difference between Sandton and Alex is massive. I mean, if you fly up into the sky in a chopper, or you fly a drone and you look at pictures, it's absolutely complex how different we are as a country. Now, even further than that, you have things like gender diversity. You have things like religious diversity. South Africa has people of different races. So you have people of different races, people of different genders, you have people of different religious groups. Now, understanding that people are different and appreciating people for who they are and their differences is high CQ. So you don't need to accept bad behavior, but understanding that people are different is a good starting point. Now, in order to be a good leader, you need to have a high CQ. You can't treat everybody exactly the same, knowing that they come from different backgrounds and have different levels of education and different socioeconomic statuses as well. And then the final component of being a good leader is your ability to deal with complexity. So there's actually a test called a BIOS test where they test your CPA. They test your ability to deal with complexity. And the reality is this one can't be changed. So CQ you can learn. However, CPA is not something that can really be changed. It's sort of linked to IQ, but it's not IQ. So CPA, your ability to deal with complexity, you'll find that some people have the ability to run 4 or 5 different divisions in a company, or they will be able to work on 5 different deals at one time, or they will be able to manage 50 people in an organization and still have their personal lives intact. Other people do not have that ability. If they're working on 1 or 2 transactions, that is their ability. Now we need to understand as good leaders what people's ability to deal with complexity is, so that we do not put people in the wrong positions. We do not put people that have a certain ability to deal with complexity in a role that is so complex and they need to run 5 different business units and manage 50 people, when their CPA is a 3, which says that they should only be dealing with a maximum of 5 people and 1 division. So as leaders, we need to understand these things. We need to understand IQ, EQ, CQ, and CPA of the people around us. But we also need to understand the IQ, EQ, CQ, and CPA of ourselves. We need to understand that we can grow our EQ and our CQ, and that's critically important for us to be successful leaders in whatever we do. So that being said, I would like to move on now to some financial stuff and some business numbers that I've tried to simplify. Sometimes they say the best person to teach you accounting is an engineer, because then they weren't taught accounting in school. Well, I learned accounting in school in postgrad, but generally we try and figure out the simplest way to explain stuff because we haven't been taught it in undergrad, right? So I've simplified an income statement into 4 lines. And basically what an income statement really is, on the top line, we have our sales revenue. That means the money coming into the business. So if you are a legal firm, the fees that you charge becomes your revenue into the company. If you are an estate agent firm, for example, let's use a random name. If you are a CF or RealNet or mid-team, your revenue for the company would be from commission earned through sales of property. Then you have the agent itself, and the agent itself is a little business entity of their own, which sort of operates within the estate agent business itself. So the estate agent's business is revenue income, and it's actually the share, it's the percentage of revenue that comes into the agent itself for a concluded transaction. So revenue is money coming in the form of a sale of a product or a service. Now, in the hardware store, we sell hammers and cement and all of those good things. At the end of a day, we have a sales number for the day. That's the revenue. So you have revenue per day, you have revenue per month, you have revenue per quarter, and you have revenue for the year. And the revenue line for the year per month then becomes the top line of your income statement. The next important line on an income statement for most businesses is a line called cost of sale. Cost of sale is mostly applicable to companies that buy and sell a product. So if you buy a hammer and you sell a hammer, your selling price on the hammer, if it was 120 Rand, is your revenue on that hammer. But if you bought the hammer for 100 Rand from your supplier, then your cost of sale would be 100 Rand. So the second line you would have on your income statement, and I'll show you an example of one coming up on the next slide. Let's just unpack the 4 main lines first, would be your cost of sale. So for some companies that even deliver a service, they back calculate a cost of sale even though they sell a service. So for example, if they send a technician out to repair, again, let's use the IT space. So some companies have a revenue line. If they charge you 2,000 Rand to come out and set up a PC and a network for somebody in your company, they can allocate a rate per hour of the technician that came out and did that job. So often they would have a cost of sale associated with that job on that line. So that's one way of doing it. The third important part of an income statement is the expense line. Now, the expense line is actually a number of lines that add up and become your total expenses. So some examples of your expense line, which I'll show on the next slide in the form of examples as well. Some of the expenses that you can think of generally are rent, telephone, electricity, salaries and wages. Those become some of the expenses associated with running a business. Now this as well, you can have it per day, per week, per month, per quarter, or per year. Generally, you find in an income statement of a company, at the end of a financial year, it'll be broken up into months. So per month, how much did you spend on that expense? And then what was the total for the year? Then the fourth important line on an income statement becomes profitability. So how much of profit or loss did your company make in a period of time? So in a month, did you make a profit or loss? In a quarter, did you make a profit or a loss? or in a year did you make a profit or a loss? Now, also, how big was your profit, and are you trending? Are you building targets for yourself on where you'd like to go? Are you looking backward at where you came from? Has there been growth in your profit in your business? Those are important things that you need to look at when you unpack your business as an estate agent or as an agent within an agency, right? Now, the interesting thing is that on an income statement, profit is only on paper. So it's not really cash flow. So sometimes we show profit on paper, but the customer hasn't paid yet. And that's a challenge, because right now, a critical component of cash flow becomes your debtors book, and how do you handle that? So it's important that you have your paperwork always sorted so that when you submit it, you get paid on time. I mean, it's an important component of business as well. So for example, my wife runs a guest house, and at the end of the month, she has some corporate clients that she needs to invoice. And when she sends them an invoice on the 30th of the month for the month, and she sends them an attached statement, it is critically important that she goes through it beforehand, make sure there's no errors, that she sends it through, that she confirms with them that they've received it, so that she knows within the next 30 days she'll be paid for that, right? So because the cash flow component of that is critically important, but generally there are 4 important lines on an income statement: sales, cost of sales, expenses, and profitability. Okay, so if you take your sales minus your cost of sales, gives you something called gross profit. Gross profit minus your total expenses either gives you a profit or a loss. Now, this is something I simplify when I work with clients, and we work through this so that we can get into a space of profitability and remain in that space. Now, I've put together some examples, and these ones I'll go through a little bit quickly, and then I'll flip through the next one, which is specifically for an example of an estate agent itself, right? So here on the left, I've used an example for an SME. Let's say it's a clothing store and they retail, it's a mom and pop clothing store, and they retail clothing. And in a month, they retail, let's use the month of March, you'll see their net sales for March was 1.5 million rand. Now, if they're selling clothing, it means they need to buy clothing to sell the clothing. So the clothing that they sold, the cost of that clothing to them was 1,155,000. And here I used, I think it was about a 23% gross profit. So the gross profit would have been 345,000. They received other income in the form of interest or in the form of settlement discounts from their suppliers. And if I add the gross profit with the other income, I'll have a total income of 356,000 for the month of March. Then they needed to pay their landlord rent, they needed to pay staff salaries, they needed to pay some wages for casual staff, and then all the other expenses like vehicles, insurances, electricity, internet, telephone, etc. So their total expenses was then 240,000. If you take 356,000, which was the total income after the cost of sale, minus total expenses, you'll get 116,000 Rand net profit. Now, if these guys were clever and they implemented some clever marketing techniques, and they grew their turnover or net sales, as you'd see between March and April, if they grew their net sales from 1.5 to 2 million, applying the same percentage cost of sale, it means that their gross profit would then be 460,000 Rand. Now you you add in your other income, so interest and settlement discounts from suppliers, the total income is 475,000. Generally, your expenses don't increase significantly when you have a nice jump in your turnover in a company, unless you need to recapitalize and take more retail space or more warehousing space. But in general, if you have a good, decent, strong jump in your revenue line, your expenses don't jump that much. So you'll see I've increased the expenses slightly from 240 to 270,000, which is significant, but the profit jumps from 116,000 for that company to 203,000 for the next month. Now, if you look, there have been clever marketing techniques implemented, and that resulted in an increase in sales, and that resulted in a huge increase in the net profit. So that would be an SME, a company doing between 1.5 and 2 million rand a month. In a year's time, they'd do a 21 million rand turnover, and there are many companies out there that do these kind of numbers. Their total profit in the period of a year would be in the region of 1.9 million. I then use an example for another company that I work with. Some companies that I work with do annual turnovers in excess of 500 million. Yes, independent companies owned by like one person. And in that case as well, if you have a small jump in turnover or sales, you have a significant jump in your profitability. So let's use an example for an estate agent, right? Looking at estate agents, this is just hypothetical. So I've just put this together as an example to show the impact of clever marketing strategies. So let's say this was an estate agent that worked within an agency somewhere in Gauteng, and their revenue would be the shared portion or their share of the portion of commission earned from the sale of a property. So let's say in the month of March, an estate agent did 2 good-sized transactions, and the combination of those 2 transactions was their portion of their commission was 80,000 Rand for that month. Now, in the estate agent's world, there isn't a cost of sale. There isn't a direct cost of sale from that commission. So you didn't have to buy a jacket for 100 Rand to sell it for 150 Rand, right? So the commission income would be on the net sales line, but there would not be a cost of sales line. So there would be a gross profit line. So total income, which is the same as gross profit in this case, is 80,000 Rand. Now let's assume that this agent paid rent. So they paid, I think some companies call it a desk fee. So they paid some sort of rent to be part of an estate agent's office. So they use the coffee and they use the electricity and they use the space, etc., etc. Or they're working from a co-working space, whatever it is. Let's assume there's a 10,000 Rand rent cost for the month. And the other expenses are in the region of 6,000 Rand. So driving around the vehicle, fuel, telephone, making calls to clients, etc. And this person spent, or this agent spent 1,000 Rand of their own money on marketing. 10,000 plus 6,000 plus 1,000 would give you 17,000 Rand as a total expense. And if you then took the total income of 80,000 minus the total expense of 17,000, this agent would make a profit of a net profit in their little business of 63,000 Rand for that month. So let's say this agent implemented new marketing and sales tactics, and they changed the way they looked at their business, and they did a couple of things differently. So they empowered themselves by creating more time to spend more time with their client. So you'll see on the wages line, I've added an admin person at a cost of 8,000 Rand. So let's say this agent had somebody doing a lot of their admin in the background, saving them time, and obviously if saving them time, saving them money, it increased their expense by 8,000 Rand because of this new wage. I've also said because this person has been spending more time with clients, I've increased the expense from 6,000 Rand to 7,000 Rand on fuel, on telephone and telephone charges, etc. And this agent spent a bit more of their own money on marketing. So instead of spending 1,000 Rand, they now spend 4,000 Rand on marketing. The total expenses would go to 29,000. But if this was done effectively and they managed to increase their net sales from 80,000 to 100,000, instead of doing 2 transactions for 80,000 in the month of March, in April they did 3 or 4 transactions, which was 120,000 Rand in commission revenue. 120,000 minus the 29,000 Rand total expenses resulted in a 91,000 Rand profit for that month. Now from 60 to 90,000, it's like a significant jump in revenue income. And if you look at what changed, the biggest thing that changed was the net sales, right? So in the world of an estate agent, the long and the short of it is that an estate agent needs to sell more. And yes, we all know that, that's a given. The estate agent also needs to get more stock, because an agent needs to have the right stock at the right price in the right area And if they have that, it increases the probability of them being able to sell to their client base that's looking for the right property at the right price in the right area. And all of that leads back. So if you want to sell more and if you want to get more stock, both of that leads back to something called negotiation. And that's why last week we did an introduction into negotiation, because it has such a significant impact in the world of an agent. So the last slide that I will jump into, well, not the last slide, the last concept, which is made up of 2 or 3 slides, is the concept of marketing. Now, marketing is actually math. Marketing is science, and marketing is easy. But we need to look at it as there's math behind it, so we need to do the numbers, and there's a science behind it, and we need to understand how people's minds work and how they think so that we can use this to our advantage in our marketing. When you understand these concepts, marketing is easy. So there are a few concepts that I'd like to go through, and the first one is a prospect. A prospect is anybody that could potentially buy a product or service from you, but they don't necessarily know you exist or have the product that they're looking for. Now, work needs to be done in order to catch their attention, and that is marketing. The work that's being done to catch people's attention, to let them know that you have the product or service that they're looking for at the price that they're willing to pay, is marketing. So once you've done that, you convert them to a lead. A lead is anyone that is aware that you exist and can provide the product or service that they potentially are looking for, and they interact with you. So either they call you, or they send you an email, or they send you a WhatsApp. The moment they interact with you and you caught their attention, they become a lead. Once they are a lead, work needs to be done in the form of marketing and certain service levels and sales. There's a difference between marketing and sales, which we can talk about more in the future. Is you need to do work to get them to buy. So there needs to be a conversion from lead to customer, right? So that's also types of marketing that needs to be done to make sure that you convert from lead to customer. Only when they are a customer do they bring in revenue into your business. Now, being cognizant of time, I have a slide here that shows how you have a pool of prospects and some of the interesting things that you can do to increase your pool of prospects. So I will use 2 examples just quickly to wrap up. The first example is if you take the hardware store in Midstream. Midstream has approximately, let's call it 6,000 houses, and on average 4 people per house. So that's 24,000 people. Some are kids, so let's remove 4,000 from that. So let's say there are 20,000 prospects in Midstream that could potentially buy something from the hardware store. Now, 2 things need to happen. One is I need to increase the size of my pool of prospects. And I've done that by adding on an online gas service where we deliver gas to Heritage Hill, to Randkiesfontein, to South Downs, to Copperleaf. So now, instead of only 20,000 people being able to buy from me, I suddenly have 25 or 30,000 people that could potentially buy from me. But work also needs to be done for me to catch their attention, to get them to understand that they could potentially buy something from me, either hardware or gas, or I could paint their house, or. So we've added products in so that we've increased our basket size. So we increase the number of prospects, and then we increase the conversion from prospect to lead by having the right stock, by doing the right marketing, by catching people's attention and letting them know that we paint houses and we deliver gas. So the moment they interact with us, we take the science again and we start to look at ways that we can convert and get them to now buy from us. So now that we've caught their attention, what are some of the things that we can do to get them to buy? And once they buy, we look at what are some of the scientific things that we can do to get them to buy again from us. Because your best customer is your current customer. It's somebody you have a relationship with. And then we look at the next time they come to us, how can we get them to buy more from us? And as we multiply those things out, it has a significant impact on the revenue of that business. So that's an example in a retail space. An example in the coaching space is I did this. Previously, I did one-to-one business coaching only with business owners that were within a 50-kilometer radius from my office in Centurion. But with COVID jumping up and sneaking up on us, I've had to change my business model. So previously, in a 50-kilometer radius from Centurion, my prospects were probably 20,000 business owners. Those were my prospects. Now I've flipped my business around, and people have become more, they use technology more easily, and therefore are willing to do Skype and Zoom and Google Meet, Microsoft Meets coaching sessions. So I've pivoted my business, I've flipped it around, and I now offer a coaching service through Zoom or through Skype or through Microsoft Teams. And my prospects now went from a pool of 20,000 people to business owners anywhere in South Africa. So right now, my prospect pool has changed to 200,000 people. Similarly, my product offering changed, so more people have access to the product, right? So I'm going to wrap up here, and we can pick up some of these conversations post this webinar, but I've run out of time, and I need to hand over to Clayton, who will hand over to Roman. I've really enjoyed working with all of you on the last 3 webinars, and I'm looking forward to maybe you guys can twist Eddie's arm, and we can do a few more of these into the future. And I'm looking forward to working with you and helping you grow your business. Clayton, I'm quickly going to hand over to you, and you can hand over to Roman. Thank you.
Thank you so much, Jamal. Ladies and gentlemen, it gives me great pleasure to introduce to you Roman Chu. If we can just get his presentation up. Cool, ladies and gentlemen, Roman Chu is the director, one of the directors at Snyman de Jager. Roman, over to you.
Thank you very much, Clayton. Jamal, thank you so much for that presentation. I found it very informative, not only during the times we currently find ourselves, but also during the good times. I'd also like to thank our business partners, Capital Legacy Fiduciary and Financial Services, for accepting to do this webinar with me and Snyman de Jager attorneys. So today I'll be going over briefly the costs involved with winding up of a deceased estate. For those that do not know what a deceased estate is, it is the assets and liabilities that one has accrued during their lifetimes, which needs to be administered at their death and distributed either in terms of a valid last will and testament, or if they did not leave a valid last will, in terms of the Interstate Succession Act. Just to recap there, I said briefly, because the estate administration process is really not that straightforward, and we could spend hours discussing the various aspects of estate administration and the costs involved therein. Almost everyone at some point will deal with the passing of a loved one. Very few people actually realize what the financial implications are at death. As a result, we fail to provide for post-death expenses. This in turn adding to the family's trauma and extremely difficult and emotional time. Stats now show that more than 30% of people who die do not have enough cash in their estates to pay for administration costs and possible debts. The financial implications for the family mostly start with the funeral costs. These costs should not be underestimated. They can vary between 10,000 rands to a few 100,000 rand. It is therefore important to make sure that your close relatives know whether you have made the necessary financial planning for such an expense, and also where to get the necessary monies from. This could either be from a funeral policy, a savings account, for example. Therefore, it would not be wise for your family to host a huge funeral whilst eating away at their inheritance if your intention and planning was to have a small funeral. Once a loved one has passed and the funeral has taken place, the next step would normally be to report the estate at the Master of the High Court, where a specific legal process must be followed. Now there's two different processes. The first would be for an estate below the value of 250,000 Rand. This would be the gross value of the estate. These are also referred to as Section 18.3 estates. And there's also a different process for those estates above the value of 250,000 Rands. For the estates under 250,000 Rands, or the 18.3 estates, there are not many formalities to be met, and most family members can attend to the process themselves. Excuse me. Should there, however, be certain complex matters in such an estate, there would be a need to appoint a professional to administer. For estates over the value of 250,000 Rands, the Administration of Estates Act 66 of 1965 sets out numerous requirements which have to be met by the nominated executor. An executor is normally nominated in a will. Anyone may be nominated as an executor in an estate, but it is important to note that the Master of the High Court will not appoint an executor unless they are qualified to comply with all the relevant laws or are assisted by an agent who meets all these requirements. Ideally, the executor would be regulated by a professional body, which requires members to adhere to a code of ethics. Should the executor be nominated other than in terms of the last will, for example, in terms of the Interstate Succession Act, this is where the next of kin would nominate the executor. The qualified nominated executor would have to issue a bond of security for the full value of the estate. This in turn will result in additional costs for the estate. This is again another good reason to make sure that you draft your will with the correct professional. The executor has a highly responsible role to play, and they literally step into the shoes of the deceased. They have the power to deal with the assets as they see fit, however, in accordance with the various laws. It is again extremely important to choose an executor or agent who knows the laws, has experience in the specialized field, and is able to assist your family after your death to find the solutions for their specific needs. In terms of the administration process, the executor will have to pay liabilities, which include those amounts owing by the deceased at their time of death, as well as the administration costs resulting from the administration process. Many people know that an estate can be liable for estate duty, which is calculated at 20% of assets not left to a spouse, and which exceed the estate duty exemptions of 3.5 million per person. However, not many are aware of all the administration costs involved with an estate. I will proceed to just list a couple of them, starting with administration costs, advertising costs. 2 advertisements have to be placed in local newspaper and government gazette during the course of the administration process. These costs can vary between 1,000 and 1,500 Rand, depending on the publication selected. These adverts are firstly to inform the public and persons with interest in the estate that the person has firstly passed away, and it also provides the details of the executor nominated in that estate. Secondly, it also informs creditors who wants to claim against the estate that the liquidation and distribution account is open for inspection. There are conveyancing fees. These would be the costs of selling and transferring fixed property. Fortunately, there is no transfer duty payable when a property is transferred from an estate to the name of the beneficiary, but the estate pays the transfer costs that the conveyancer for the transfer of the property. This fee depends on the value of the property and is determined in terms of a sliding scale and tariffs imposed by the Law Practice Council. An average property with a value of 1 million Rand will cost about 20,000 Rands. If the property must be sold, the estate will incur additional costs such as estate agent costs and commission. One of the requirements to transfer a property is obtaining a clearance certificate from the city council or municipality. The certificate will be issued only if the rates and taxes are paid in advance. The period that has to be paid varies from area to area, but normally is about 3 months. Again, very few people have the cash necessary to pay for rates and taxes on a property for such a period in advance, as this could be another few thousand rands. This needs to be planned in advance. There are master's fees payable. This is the fee payable to the master's office, which is the authority that handles the deceased estates. They are calculated on a sliding scale depending on the value of the estate to a maximum of 7,000 rands. There are executor's fees. In terms of current regulations, the fee is 3.5% VAT excluded on the gross value of the estate as at date of death. Also 6% value added tax excluded on income earned by the estate after date of death. Executors' fees have always been to be a contentious issue. It is important for people to understand what fees can be charged, how they are calculated, and what an executor's responsibilities are in order to receive such a fee. Please note that pension funds and proceeds of policies payable to third parties are excluded from an estate as an asset and are therefore not taken into account when calculating the gross value of the estate and in turn the executor's fee. If you decide to nominate a third party on a life policy to save on executor's fees, be careful that you don't fall into the trap of other situation that could be worse. For example, here would be if the minor is the nominated beneficiary on such a policy, the insurance company can pay the funds to the guardian at that time. This could be a previous spouse, and this may not be the person you would have selected to receive the funds. It may be worthwhile allowing the policy to pay into the estate and ensure that the funds are protected and managed properly. Everyone's circumstances are different. However, please seek expert advice if you are unclear what the best solution would be in your situation. There are also taxes to be paid. Estate could be liable for the following: individual income tax, estate duty tax, and capital gains tax. Not only will all outstanding taxes have to be paid from the estate before it may be finalized, but the executor will have to determine whether capital gains tax is payable as death is a deemed event for capital gains tax purposes. An estate may therefore be below the threshold for estate duty tax, but still incur a capital gains tax liability. Other debt can include outstanding bonds on fixed property. I'm just going to spend a bit of time on this one. In most instances, there's still an outstanding amount due on the bond at date of death, which has to be settled before the executor can firstly transfer the property to the nominated beneficiary and thereafter finalize the estate. Often the surviving spouse does not qualify to take over the bond, which results in the family home having to be sold. People also sometimes think that they have a policy that will pay out and cover the outstanding balance on the bond at death, but find out that this was only short-term cover and not life cover when it's too late. Unfortunately, taking out life cover is not required when a bond is applied for. This would have saved many tears. Outstanding amounts on credit cards and overdrafts is other possible claims against an estate. Here, it's important to remember that interest on outstanding debt does not stop when a person dies. So interest-bearing accounts have to be settled as soon as possible. There are other costs, such as medical costs. In most instances, when a person dies, there are bills to be paid. As medical aids don't always cover all the medical costs, it's also difficult to determine what these costs could amount to, but they could be substantial. There are also the costs of valuing assets, the cost to transfer shares and timeshare, bank charges, postages and petties, maintenance of assets while the estate is wound up, tax accounting fees, costs for duplicate original motor vehicle registration certificates, and also possible maintenance and accrual claims. Each estate is different, and there is therefore a need to work out your own cost and make a plan to ensure that there is enough cash in your estate. Many estates are solvent. This means that your assets are greater than your liabilities, but are illiquid, meaning that they do not have enough cash to settle the debts and administration costs. The available options to the beneficiaries in these circumstances are limited and unfavorable. The options available are that they could pay cash out of their own pockets into the estate to avoid the sale of assets, or if they're unable to do so, the executor may be forced to sell a valuable asset such as a home or a car to generate the cash in order to settle the debts and costs. In my years dealing with this exact problem, there never seemed to be a better option available to deal with the cash shortfall issue. The usual answer that clients would get from their advisors when undergoing estate planning would be to take out life cover in order to make provision for the costs involved. However, this in turn would simply increase the gross value of the estate, and in turn, the estate costs that exact life insurance was covering. Doesn't make sense, does it? There is now, however, a solution whereby beneficiaries do not lose out, they gain. The solution is a first-to-market product called the Legacy Protection Plan by probably the most innovative company within the fiduciary and the specific financial industry. To present and discuss the Legacy Protection Plan, I would like to invite Mario Fourie from Capital Legacy Fiduciary and Financial Services. Thank you very much.
Thank you so much, Roman, for sharing that with us. Ladies and gentlemen, allow me to introduce to you Mario Fourie. Mario is the Senior Consultant and Sales Team Leader at Capital Legacy. And Mario is going to take us through the real cost of dying and the Capital Legacy Protection Plan. Mario, thank you. Over to you.
Thank you very, very much, Clayton. Thank you for hosting an amazing event, and Jamal, thank you for yourself as well. It's always an amazing privilege and honor to work with you guys. And then from myself and my team side, Roman, thank you for asking us to assist you with today's presentation. So, ladies and gentlemen, before I start, I would love to show you just a video to reiterate on what Roman has discussed with you guys, but also to give you a guideline as to what I will be discussing with you guys. So often during a consultation, myself and my consultant gets asked the question, but Mario, what makes the legacy protection plan unique? Why should I need a legacy protection plan in my financial needs analysis and in my life? And the answer is simple. The legacy protection plan is a unique, very cost-effective, all-inclusive solution that accompanies your will, that will take care of all the exorbitant legal fees in the end of the day when you do pass away. Further to this, the LPP also, or the legacy protection plan as we call it, also offers you the protection for various other ongoing expenses. And these ongoing expenses is a topic or a thing that not a lot of people consider when doing financial planning. So if we look at the benefits of the legacy protection plan, as I previously mentioned, so the legacy protection plan will cover all of the services that is specified under our legacy services. These services.
Sorry to interrupt you, Mario. Your presentation is not up on the screen. If you can just switch back over to your presentation.
Is it?
You're still on the video.
Can you see it now, Clayton?
It's just saying waiting to view. So if you just hit the show button. There we go. And just scroll up to number, yeah, cool. There we go. Thank you.
All right. Sorry about that. So as I mentioned, the first benefit of the legacy protection plan, it'll cover all of the specified services that we offer. These services include, but is not limited to, all deceased estate administration, all testamentary trust administration, and all the other deceased estate fiduciary related services. With the correct legacy protection plan, the people that your loved ones that you leave behind will not have to worry about any executive fees, any testamentary trust fees. The testamentary trust fees will obviously only be applicable once there's minor children involved, and then also no policy claim fees. Attached to most of the legacy protection plans, there is what we call an immediate liquidity benefit, which is in essence a cash benefit that is usually payable within 48 hours to a nominated beneficiary. Now, a big problem that we often see in households is a cash flow issue. So families can use this particular benefit for anything that they need. The fourth benefit of the legacy protection plan, as Roman previously mentioned, is that there's initial fees that needs to be paid. Example, the master's fees, the municipal clearance fees, the advertisements fees. All of these fees will be covered by the legacy protection plan. There's an additional element, as I mentioned previously, ongoing fees. Now, this is the thing that not a lot of people think about. And that is, if you have minor children, say for instance, school fees still need to continue, medical aid still need to continue, groceries, water, electricity. So there's a whole line and a whole bunch of expenses that still need to continue after someone has passed away in the family. And then the fifth benefit of a legacy protection plan is that in the event if both husband and wife had to pass away, then the children could potentially be faced with a massive inheritance tax mounted in front of them. During the consultation, the consultant will take you through everything, and should the legacy protection plan be planned and structured correctly, the plan can even cater for those fees. So the legacy protection plan is built up in 5 building blocks. The very first building block, the purple one, as you can see, is our legacy services. As previously mentioned, our services include, but is not limited to, estate administration, testamentary trust administration, the conveying of the properties, and all other deceased estate related services. The second building block, the green one, the indemnity plan. So at Capital Legacy, we realized that no will is exactly the same. No household is exactly the same. No estate is exactly the same. So that's why there's various different legacy protection or indemnity plans to cater for your individual needs. The third block, the blue one, immediate liquidity. So most of the legacy protection plans has a immediate cash benefit attached to it. On top of that cash benefit, you can also cater for cash benefit in the event if your child had to pass away before you, or even one of your parents had to pass away before you, so that there's liquidity within your hands to assist with certain expenses. The fourth benefit, or the fourth building block, the estate's overheads. So the overheads side can be broken down into 2 legs. Leg number 1, that's the initial expenses that Roman was referring to earlier. This is where the master's fees comes in, the advertisement fees, the correspondence fees, but also the municipal clearance fees can all be covered under this section of the plan. The second leg is the ongoing fees. I mentioned earlier that there's an aspect that not a lot of people consider when they do financial planning or estate planning, is that certain expenses that you experience or that you have within your household does not cease or does not stop when someone had to pass away, like school fees, medical aid, short-term insurance, groceries, all those kind of expenses. Now, personally, I always advise my clients, or I tell my clients that when I consult with them, in a perfect world, ideally, you would like that when you do pass away, that the standard of living, the lifestyle you have now, must at least be maintained as far as possible. Now, it's also good to mention that the ongoing expense estate overheads benefit is a monthly assistance benefit that could assist your family or your loved ones on a month-to-month basis. Then the last pillar, the gap cover, as we mentioned, in the event if both husband and wife had to pass away, the children could potentially face a tax mountain in front of them. And this is where the gap cover comes in. So that the gap cover that's literally why we call it the gap cover, so that the gap cover fills that gap to take care of those inheritance taxes and also any additional legal fees that could be applicable against the estate should both husband and wife had to pass away. So now you might say, okay, Mario, this is all great, fun and good, but how does this fit into the real world? So let's just quickly have a look. So now we can see, so now as a practical example, let's meet qualified professional Kate. Kate is a single mom with one minor child, age 12, and Kate's entire inheritance goes to her little child. This child's inheritance will be placed into a testamentary trust up to the age of 25. In Kate's estate, there's a property worth 2 million rand. She's got a vehicle valued of 300,000 rand. And then Roman touched on it earlier, life cover that is payable to the estate of 1 million rand. So taking all of those into consideration, Kate's estate is now faced with 475,855 rands of legal fees. These fees are broken up in executive fees of 92,575, property conveyancing fees just over 30,000 Rand, and then testamentary trust fees of 352,000 Rand. Just on a note here, that testamentary trust fees is calculated over the duration of the lifespan of the trust. Because if Kate had to pass away today, the trust is going to run until the age of 25. Her child is currently 12, so that trust has to run for approximately 13 years. So taking all of this into consideration by doing the consultation, Kate will now qualify for the Gold Legacy Protection Plan. This particular plan will cost Kate 134 Rand and will give her 100% indemnification. Now, what does this mean? You will see at the bottom left, there's a maximum indemnity benefit. So, which means on the gold plan, the gold plan offers you 783,750 Rands worth of indemnification. So, I mentioned earlier that the total fees is 475,000 Rand. That 475,000 Rand will be taken care of, or will be taken care by that maximum indemnity benefit. On top of that maximum indemnity benefit, there's an immediate liquidity benefit of 83,600 Rand. This immediate liquidity benefit is, however, a once-off payment that we make to a nominated beneficiary. Also included as an additional benefit is the estate's overhead protector. This particular overhead protector is the once-off payment, this 31,350 Rand. And under this benefit, all of those initial costs will be covered. For example, the master's fees, the municipal clearance fees, the correspondence fees, the advertisement fees. And then as an added benefit, the estate gap cover is then there to cater for any additional tax implications that she could have. And then total plan value is just over 1.4 million Rand for 134 Rand a month. So listeners, you could agree that the legacy protection plan can add tremendous value to your financial planning going forward, and at a phenomenal affordable price. It is definitely something to look at. So going forward, how it will work is, should you wish to consult with us, you can submit your details through to Snyman and De Jager. They will then get in contact with us to schedule a meeting, do the proper calculation, do a face-to-face consultation. On that note, during this COVID-19 epidemic that we're currently facing, we are part of the essential services group, so we can arrange face-to-face appointments should you wish to do that. However, we also offer virtual consultations where we can either do it telephonically, we can do it via Zoom, Skype, Teams, one of those platforms. And during that consultation, we will then calculate and take you through the whole process to determine what your individual need is, and then we will recommend the correct and most suitable legacy protection plan for your current situation. So ladies and gentlemen, listeners, that is all from me. Thank you very, very, very much for your time. I'm going to hand you over now to Clayton, that will take you through the remaining of the presentation. Clayton, over to you.
Thank you so much, Mario, and thank you for that very enlightening discussion around the real cost of dying. It makes you almost a worry to pass away because it seems very expensive, but at least you've got that part covered to make sure that our families, can move through that difficult period in peace, knowing that they don't have to pay over lots of sums of money. We just have one question for you, Mario, and that is, does the legacy plan make the gross assets or the deemed assets more? And consequently, that is there more than estate duties payable on that amount?
No, no. So the advantage of the legacy protection plan is that it is not a life cover. And that is specifically how the product was developed. So it's not a life cover where there is a beneficiary that will handle that money, especially the immediate liquidity benefit. It's just cash that pays out, so it doesn't form part of your estate. So there's no implications of increasing the value of your estate.
Perfect. And then Jamal, there was just one for you.
Yeah.
So the question is just, is it possible for you to provide some budgeting tips to estate agents just with regards to their own personal finances? So things like simple issues, determining expenses, allocating it in the months, planning what income should be. Is there something that you perhaps could assist there, provide more information?
Yeah, so thanks for that, Clayton. That's actually part of the coaching process, and that's what we do as we build a business for an individual. So what I'd like is for the person that asked that question, if they can please pop us an email, and I'll respond to that email with a few of the tools that we use when we're coaching. So I'll send that through, and the person can start to use that already.
Cool. And that email would just be growing@jamalsahib.com.
Correct. It's the one that Tessa has been emailing people from, and Tessa will also email everybody at the end of this with the PDF of the presentation, so they can reply to that same email.
Perfect.
Awesome.
And then one was just a comment rather than a question, but just a tip to everybody to keep on mining within your own minds. So Sneeman de Jager tries to maximize the existing relationships within their existing customers. And I think that's an important tip for a lot of us business owners. We already have a customer base. It's much easier to upsell and cross-sell within your existing customer base than to start looking for new customers as well. That's all the comments that we have for today. Sneeman de Jager, thank you very much for these 3 sessions. It's been most informative. I think everybody can agree. Jamal as well, your insight as always is very, very profitable. Ladies and gentlemen, thank you. Enjoy this short Friday, your day off tomorrow for Workers' Day, and have a great weekend. Thank you, everybody.
Thank you, Clayton. Thank you, everybody.